you who were with us online. Thank you for giving us the chance to have a little break over here, and hopefully you could all have an enjoyable break as well. So I'm very, very honored to actually introduce our next panel because for me, a lot of the work that's going on in the world of intellectual capital, intangible assets, is really the future of sort of where we can start to think about in areas that haven't become familiar with intellectual capital, intangible assets. It's an area that has made incredibly large strides related to value and value measurement, and ones that I hadn't actively heard about before until bumping into Stefano Zambon and Laura, maybe I don't want to date exactly when, but I know it was pre-COVID. But just learning about what they were doing, and then through them being introduced to Ludo and Maria, and sort of going into the details of what it is that they do, and realizing very quickly that this is fundamentally important for thinking about value measurement. And the key point that I'd like you to take away is there's a lot of talk of many different models for measuring value. But for me, this is the only one that's been able to stand up to the test of defensibility, and one that you can apply to any company of any size in any country and still come up with a very clear, understandable, explainable answer for how value has been measured. And I think, again, remember, please, that I'm a marketing professor. And one of the things that bothers me is that I am teaching the next generation of leaders to lie nicely about all the terrible things that companies are doing. And so to be able to change that model and to have a defensible, explainable, mathematically sound accounting aligned system is fundamental to the things that we talk about. And this is the only approach that I've found yet that actually has never failed in terms of showing something significant. So it's a huge honor to actually have Ludo, Laura, Maria, and I think we also have Arvin, who I need to just also highlight here on the screen. But anyway, I will turn it over to you, Laura and Ludo, to help us manage this session. So please take it away.
Okay. So Laura and I, we agreed that we would, well, I will do a short introduction and Laura will do the end. And then in the meantime, Maria and Ashvin can give some examples of what we do, and then can Laura go into more depth. So as the follow-up of Philip's introduction, so I am the founder of AREOPA. We started in 1987 already. Our organization today, we are more than 700 people around the world doing everything that has to deal with intangible assets and measuring intellectual capital. So that is what we are doing today, but you don't do it only go and do a measure and everybody is happy. You have to encompass that into projects that will lead to investments, to larger growth of organizations and stuff like that. So that I think is what we are going to focus on. Laura, you are going to go for the sustainability, I think. Please introduce a little bit, and then we move to Maria and to Ashvin, and then back to you, and then we can have a presentation.
Thank you so much, Ludo, and actually thank you so much to Philippe for the kind invite to co-chair this panel together with Ludo, and also hear the experts, Vin, Maria, and Ashvin here. So I am Laura Girella. I am Associate Professor of Business Economics and Corporate Reporting at the University of Modena and Reggio Emilia, basically in Italy. But as some of you probably already know, because I actually saw some familiar names here, I do also collaborate with the IFRS Foundation when it comes to integrated reporting and also sustainability. And so, as Ludo mentioned, actually, what I would like to do at the end of this panel is try to take stock before thinking about the future of what is going on, especially in the sustainability, so-called sustainability arena, to possibly then think about scenarios and ideas on how to take better into consideration, let's put it that way, without going into the technicalities, about intangibles when it comes to value and when it comes to value creation. Back to you, Ludo.
Okay, thanks. Maria, can you start? You're mute. You're mute.
Mute. Okay. I'm Maria Weir. I am the Vice President of Research, Development and Intellectual Capital at AREOPA, and I'm also the CEO of ARIC, which is AREOPA's Research in Intellectual Capital and Development organisation. My role there is to look at how AREOPA is developing its future view on intellectual capital and the value that intellectual capital has within companies. And we have a different view of sustainability and ESG than perhaps many others, in that in the work that we've been doing with Philip, we've come to a conclusion that sustainability and ESG are not different from intangible assets. In fact, if you take a 7-stakeholder view and you see sustainability as the artifacts which come out of the things that companies have, then those artifacts, in fact, are intangible assets, and the intangible assets can, in fact, be dealt with in the exact same way as every other intangible asset. And as long as you then have a stakeholder view which says there are things that you give to stakeholders and things which you get from stakeholders, so you have a circular view of the economy, then you do not have to have a new way of looking at this. You can, in fact, use intangible as an intangible asset view of how you look at sustainability and how you look at value. And Philip and I have now written a couple of papers on this, and we're developing that as a sort of theme as we go forward. And so, and the work that we've been doing this year in AREOPA has all been around getting that view of sustainability and value into the work of intellectual assets.
Thank you, Maria. Do you want to add something more there about audits and stuff like that, or?
No, I'm going to deal with that in the presentation.
Okay. Ashvin?
You're mute.
Yeah.
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 Thank you, Ludo. I would say very good morning, first of all, a good afternoon to all, depending on your time zone, obviously. A brief intro on myself. I'm Ashvin Gokhool. I come from a financial background and work in the Big Four, what Maria don't like at all. And I was also the auditor and the consultant over there. I've been advisor to the government in my country. Until recently, I was also a diplomat in one of the European countries. I'm also the director of Morrison Global, an association of accounting firms and consultants, and the chairperson of Morrison Global Africa. At AREOPA, I'm in charge of sustainable finance mobilization. Should I share my screen, or it is being shared already?
No, it's not being shared.
Okay, so I shared my screen.
What you're going to hear now is an example of what how we use it. So that is interesting.
Is it fine?
Yeah, it's fine. We see it.
Yeah.
Ashvin, if you can actually put this up on presentation mode, that would be
Yeah.
helpful for us if it's
Slideshow
possible.
from the beginning. Is it fine?
Yeah.
So,
Yep.
yeah,
Perfect.
yeah, perfect.
Okay, thank you. So I'm going to talk on the Ferrara model that we develop at AREOPA. The Ferrara project that we develop is designed to help emerging countries or economies accelerate their transition into knowledge economy. So we recognize that there are structural challenges and we have to face them. Ferrara focused on 5 high impact priority areas, namely, as you see, economic diversification, SME financing, innovation capacity, youth and women employment, as well as knowledge-based tech adoption. What distinguishes Ferrara is it is an integrated model. It's embed ESG principle and leverage intellectual capital management, which is obviously the strategic development and application of knowledge, expertise, relationship, and intangible assets. Its implementation is done through innovation centers, which serve as hubs of applied knowledge, entrepreneurship, and sustainable growth, delivering values for all stakeholders, thereby contributing to UN SDGs. The key features of the innovation centers are a rigorous selection and innovation due diligence. We assess not only the business model, but also the knowledge, skills, and capabilities of the team, KKCs, the key knowledge carriers. We also do a high-level estimation and milestone-linked funding, provide financial support, which are aligned with readiness level and value creation to maximize impact and reduce inefficiencies. Thirdly, we have embedded knowledge managers inside the SMEs. These are dedicated experts. They would support these SMEs by driving the execution, monitoring process, and ensuring long-term knowledge retention. Fourthly, we go for training, coaching, and rapid intervention team. That's a very important aspect. There would be continuous learning within the organization, but would also activate that rapid intervention team to address any operational challenges before they can even escalate. Fifth, we'd go for the intellectual capital being a national asset, codifying and retaining knowledge within the country itself, strengthening its resilience and ensuring its reuse. Obviously, we need to grade everything within the university and the ecosystem, fostering for applied research, skill development, scalable innovation pathways through formal partnerships. How we work with them, with the emerging economies, is through a very structured collaboration similar to a PPP, public-private partnership. Under the agreement, innovation centers would be strategically aligned with national development priorities, serving as catalysts for leveraging knowledge, technology, and innovation to accelerate the growth of selected high potential SMEs. This joint initiative for funding mobilization resources in the form of either grants, equity, or loans from donors institution, grants providers, MLI, DFI, private sector institution, as well as other institutional investors. I can say that this collaborative approach would ensure the sustainability and also the scalability of the project impact across all partners. The Weir project within the circular economy. So it's fully embedded. We design it in such a way that it ensures that resources are eliminated from waste stream at the outset, continuously reused and repurposed, also leveraged to actively enhance the environment. In this multi-stakeholder value chain, the output of one stakeholder becomes the output of another one. Value in is value out. Therefore, we create a dynamic, sustainable system of shared value creation. Ferrara applies a total value framework, which measures, as you see, value across the 7 stakeholders group: firms, shareholders, customers, employees, partners, society, and the planet, of course. You see the formula, which is total value is equal to the sum of all the value of the 7 stakeholders. This approach ensures that value is not only financial, but also social, environmental, and intergenerational, aligning business success with sustainable development. I put an illustration to show the total value framework in a circular business context. So in fact, let me just explain in practice. So shareholders' investment enables the creation of firms, which acquire tools, equipment, services from partners, generate employment, deliver goods and services to customers, and yielding profit for either reinvestment within the organization or payment of dividend back to shareholders. All these are done also towards the society. So firms also contribute through their fair share of taxes, run even CSR initiative and community development project to ensure benefit for the whole society. In this interaction, it is really essential to ensure that resources are used sustainably to preserve nature, our planet, and our planet is left to our future generation. In terms of our long-term vision, so AREOPA will set up the innovation centers and operate them during the initial growth phase. And once maturity is achieved, we transition the ownership and management to local stakeholders. The ensuing objective is to ensure that there's long-term sustainability, resilience, and national ownership of the knowledge economy transformation. Thank you. Back to you, Ludo.
Okay, Laura, you.
Ludo, will I do my presentation?
Okay, yeah, please. I thought that you did.
No,
Sorry.
no. Okay, I'm going to share my screen.
Yes, please.
It's a very short presentation. Okay. So the problem with most current models is that ESG is mainly treated as a compliance thing. We've got lots and lots of scoring systems, and most of it is about compliance and not about value. We have IAS 38 and IFRS, and they do recognise intangibles, but if we're not careful, they only recognise narrow categories. You have to be quite inventive or quite very, very careful about how you collect the evidence in order to get the broadness of the categories in order to get it onto the balance sheet. So as a result, intangible assets can remain invisible on balance sheets. And that means that stakeholders receive fragmented value narratives. What that does then is we, through our AREOPA 4-leaf and 10 steps, we turn, wait a minute, we turn intangibles into auditable intangible assets that can go into the balance sheet. Valuify and the value model map the ESG scores. ESG and intangibles are all reframed as strategic value positions. And we have these very clear routes to monetization and growth. So we have monetization routes using the IAS 38 balance sheet. We have investor readiness. We use licensing, IP, tokenization, and neural distributed ledgers, all in fact to ensure that we have those monetization routes that auditors can in fact audit. And what we've done over the years, and what we've been continuing to do this year, is we've actually managed to put quite substantial amounts of money onto the balance sheets of clients using the IAS 38, only because what's important is not putting the asset as an asset, but collecting the evidence that underpins the asset. That is the real trick here. Collect the right evidence and show that you've got the evidential route to the asset that an auditor, all the auditor then has to do is to say, is it identifiable? Is it separable? Is it protected? Is it safeguarded? And does it create economic value in the future? If you can prove that through the evidence, it will go on the balance sheet. That is the trick that I think we have missed getting auditors, getting accountants to actually get companies to do. We get them to do it with their tangible assets, but we somehow forget to get them to do it with their intangible assets. We also want to make sure that in all of this, there's a value add for stakeholders. So for stakeholders, which are shareholders, customers, employees, partners, regulators, the environment, in all of those cases, there should be a value add both for them and for the company. So this is a circular economy approach. So you want to make sure that the multi-stakeholder value is there. So in case of shareholders, that's an ROI and balance sheet strength. In case of customers, that's trust and loyalty. In case of employees, that's retention and the innovation culture. In the case of partners and alliances, that's the growth multipliers. In the case of regulators and society, that's ESG compliance and credibility. In the case of environment, it's regenerative impact. And we should always be about shifting the model from the zero-sum model to a circular value. And here are some case examples. So these are actual examples of what we've done. So in the case of GNO, which is the only one that I'm actually able to give you the name of, we've got a soil improvement ESG. We reclassified their ESG as structural and customer capital. Now they have 8.9 million audited balance on their balance sheet, and they have a projection of 2.56 million. That 8.9 million is audited intangible assets on their balance sheet as assets, and 8.9 million as reserve equity on the liability side. MedTech innovator, They have governance and R&D partnerships. It's valued as strategic alliance capital under IAS 38, and it's been about improving investor readiness. The Green Tech Battery Company, customer growth, strategic contracts are recognised as appreciating intangible assets. Those contracts are structural assets, and we're at 20 million in terms of existing structural capital on the balance sheet. We're also looking at what the fair value might be in the future, but those strategic contracts are still quite new, so we need to do a re-audit at the end of this year. So that is the examples of where we've actually had an auditor go in and do the work. So we provided the evidence for that, and the auditor came in and signed off against these sums. In the case of the Agritech Biologicals and the Green Tech Battery Company, both of them were US companies. The MedTech Innovator is a European company. And this is the future. So we redefine ESG and intellectual capital as auditable, monetizable assets. We have a collaboration with Philip and Valuefy to ensure global rigour and investor relevance. We have future pathways. So we have the Impact AI tool, which is our first stage. We will then have the IC Compass, which is a joint tool between Valuefy, Philip and Kyle's company, and AREOPA. We're going to have blockchain with neuro-distributed ledger traceability. It's going to have integration with CSRD and IFRS S1 and S2. And our call to action is to transform in every company hidden intangibles into strategic growth capital. This is a strategy tool as well as a monetizable tool. So this is how companies need to grow their strategies, because if they don't understand what they've got, they can't build a strategy and they can't manage their company. And that is me.
Okay, thank you, Maria. Laura, can you conclude with your presentation?
Yes, thank you so much. Okay, so as I said, trying to pull all the strings together here, having heard from Ashvin and Maria, and I think that I will also quite pick on what Maria said around fragmentation, because actually, even before thinking about the future of intangible assets, I think it is interesting to understand what we mean by intangibles, because depending on the perspective that people take on the lens through which people look at intangibles, we might see different type of intangibles. So if we look at intangibles from an accounting perspective, especially within the scope of the International Accounting Standards Board, as Maria also mentioned, there is this kind of divide between the current intangible assets and the so-called unrecognized intangible assets. But then in addition to this, as we already know, especially when it comes to the area of sustainability and value creation, there are many other intangibles, like, external reputation or the business model or even the strategy that Maria just mentioned. They all reference to value creation. And as you can see, in this kind of a simplified depiction of the scope of intangibles, some of the intangibles that are related to value creation are also interconnected with those of sustainability. Let's think about human capital. If we think about human capital, it is possible to think about human capital for sure from a sustainability viewpoint when it comes to health and safety, but also from a value creation perspective when we think about, We focus on the competencies of the employees or the workers in the value chain, the training, the skills, and so on. So I think that, first thing possibly also, not for now, but also for the future, is to think about when we talk about intangibles, what do we mean by intangibles? And clearly, also when it comes to connectivity and location of information, this is going to create some issues. This is mainly because all these variegated system of types of intangibles or definition of intangibles has then been reflected into the corporate reporting ecosystem. Again, super simplifying type of slides, trying to understand which are the different organizations that we deal with intangibles. So as we know in accounting, there is the International Accounting Standards Board, but also the International Valuation Standards Council has started to deal with intangibles. And then on the so-called non-financial reporting or value creation or sustainability, depending on the term that we want to use, then there is the International Sustainability Standards Board, there is GRI, there is Wiki. And so all of this, is kind of reflecting the different type of intangibles that do exist um, within the corporate reporting ecosystem. One possible idea through which all of these different initiatives can be pulled together is through the idea of integrated reporting, but let's not forget about the role of digitization and XBRL. So let's try to focus now on what is happening now before thinking about the future in the area of intangible, with a specific focus on the initiative that I just mentioned. Maria mentioned before the shortcomings when it comes to IS 38, which is absolutely understandable. This is mainly why there has been so much academic research and also different initiatives dealing with intangibles, because clearly IS 38 is not well suited when it comes to the recognition, measurement, and disclosure of intangibles. Thankfully enough, let's put it that way, but in April last year, the IASB, following the agenda consultation and the comments that the International Accounting Standards Board have received, decided to revise, start a revision project on IS 38, which is focused on intangible assets. Actually, the idea is mainly to take stock also of all the new intangibles, like when it comes to artificial intelligence, when it comes to data, when it comes to all those intangibles that were not there when IS 38 was initially developed. And as you can see, this project has just basically started. The project will now start to explore what are the user information needs, because as you know, the key point when it comes to standard setting is to make sure that the standards are able to respond to the user needs, and then also understand which are the potential changes to the definition and some recognition criteria. And that there may be other later steps that have still to be determined, like, what should be the disclosure requirements, what about the comparability of information, and so on and so forth. So clearly, when it comes to accounting, there is something moving. Let's see where we are able to go here, but at least something is moving. Similar thing is happening when it comes to valuation. As I said before, the International Valuation Standards Council also decided to focus on the topic of intangibles, because clearly our intangibles also when it comes to valuation. And so they develop perspective papers in the period, the quite recent period, between 2021 and 2024, all dealing with a different type of intangibles, again, from a valuation perspective. Then what about sustainability? Maria mentioned before also IFRS S1 and IFRS S2, which are the sustainability, so to speak, standards issued by the International Sustainability Standards Board. But again, something more is moving, especially in the area of human capital. Again, following the agenda consultation, the ISSB has initiated a research project, one focused on so-called bees, so basically nature, and the other one focused on human capital. And some of the initial takeaways in doing the research in the topic of human capital is that clearly human capital is much more developed than nature when it comes to, providing investor with useful information. But actually what has been found is that there are no consistent information by investors. So for example, there is a variety of information that investor might want to have, also depending on the sector and or the jurisdiction when the company they relate to are based. And this is also depending on what is the focus, basically, and what we refer to as human capital. Is it human capital, meant as the workers, with the employee in the company, or does it entail also the company, the workers in the value chain? Again, something is moving also when it comes to sustainability and with a particular focus on human capital. Another initiative that is doing some work in the area of intangibles, here not really about sustainability, but mainly from a value creation perspective, is the World Intangibles Capital Initiatives that in 2016 developed a companion framework to the integrated reporting framework with a particular idea to measure and report on intangibles. And interestingly enough, Maria then before mentioned the role of strategy and of strategic focus. And actually within the Wiki Intangibles reporting framework, which is a framework to report information basically on intangibles, there is this differentiation also between strategic intangibles and other intangibles. What is the work of that wiki is also doing, in addition to providing a framework, is to develop key performance indicators, because then the idea is to help companies, also depending on the sector that they operate, is to provide information around sector-specific information. So what Wiki has been doing is basically to develop 50 sector agnostic, so-called sector agnostic, so it doesn't depend on the sector the company is operating KPIs, but also key risks indicators, because sometimes the focus seems to be mainly on assets, but let's not forget about risks and let's not forget about liabilities. And then also in addition to this, Wiki has also been developing nearly 600 industry KPIs, again, in order to capture sector-specific information, but from a value creation perspective. And then we can debate on what we mean by value creation. But the overall idea is that it is not only sustainability, it is not only accounting. Let's think about, the value creation perspective. When it comes to value creation, then another idea, as I said before, is the idea of integrated reporting and integrated reporting framework, which is quite diffused, especially in Japan, because when we think about how to report on a voluntary basis on intangibles, then one kind of obvious reference point, forgetting about accounting standards, forgetting about the mandatory disclosure, is around the integrated reporting framework, because back in 2013, the framework was already indicating 6 capitals on which the company tends to create value, so sits in order to create value, 3 of which, as we know, relate to intangible, being intellectual capital, that is meant in the framework are organizational capital, so the procedures, for example, that are live within the organization, but also the relationship that the organization has with the external as environment, as well the competencies and the skills of the employees, what is referred here as human capital. And all of this then, what is doing the academia, because that could also be the question wearing my academic hat here, is that we can see a renewed interest in the area of intangible also from an academic perspective. So there are many recent papers that have been dealing with different type of intangibles, as I said before. So dealing with, R&D, dealing with accounting, but also dealing with human capital. So many different interests depending on the type of intangibles. I do think, before going to the conclusion and some possible ideas about the future, is that there are a few open interconnected issues that I think should still to be solved. One is around, what around crypto assets? What about carbon credits? Can we define crypto assets and carbon credits are intangible assets? Because if we follow the IS 38, definition, by definition, intangible assets have a non-monetary nature. So is it possible really to refer to crypto asset as non-monetary nature? Then there are other questions around, the classification of intangibles. As I said before, it is important to have a common definition of what we refer and how we classify intangibles. What about the new digital intangibles? Which is also one of the reasons for which IS 38, decided, the IASB decided to revise IS 38. What about the data, the value of data? What about AI models? And what about, what is referred to as the control divide between accounting and non-accounting asset? Should it stay this control divide, or should we reference to something softer like the availability for non-accounting assets? And then there are other topics related, for example, to the fair value debate. So how to recognize and measure intangible? Should it be through fair value? What about the location of intangibles related information? Should it be within the financial statement, within the sustainability statement or sustainability report, or should it be around the integrated report? So there are, all these different questions that actually remain open in thinking about the future. So 3 very simple ideas. One is around, let's try to reach a consensus for a common and global definition of intangibles, because if we, in this conference, in other conference, when we talk about intangible, we should be clear about what we all mean by intangibles. The second part really speaks to what Maria said before, which is around consolidation, because as I tried to show, there are many fragmented initiatives that we hope that might align into a more unified reporting system. And then it comes to the integrated approach, because intangibles reporting could evolve from a fragmented add-on to being central in financial and sustainability reporting that, like the model that Maria showed before, represented both the systemic value creation, but also the long-term sustainability. And I'm going to hop here, Ludo.
Okay, thank you, Laura. Any questions to us? Oi, it becomes so quiet.
So people can put questions in the chat. We have actually many questions in the room. So
Right.
are our interpreters working? I think if everyone, we may have some.
In the meantime, Maria, you had a remark, and you maybe in the meantime react on it.
Yeah, I do. I think that we spend a lot of time trying to define intangibles. And we've spent a lot of time, I mean, I've been involved in intangible assets for almost 30 years, right? And I've been in the community for a long time, and I've been in this debate about what is an intangible asset for a long time. I actually don't think it matters what the definition of an intangible asset is. I think what matters is what is the evidence. Right? So if I get an intangible asset, if I get an asset, and I ask myself very clearly, can I identify it? Can I separate it? Can I protect it? Can I safeguard it? Can I manage it? Can I control it? And can I exploit it? Can I do those things to it? Then the answer to that is, well, first, is it intangible? Can I not touch and feel it? That's the first part. Right, so can I do those things to it? Then it is an intangible asset.
Yep.
Right? I don't think it matters. And like we don't have this view that some of the things that you've got, which you say is not in the IASB, Well, we count those in the ISB. We do data, we do AI, and we count all of those in the examples that I've given you. And we've had auditors pass them because we provide the evidence.
Yeah.
An absolutely audit file, audit ready, complete file that says, here is this asset, here is the contract, here is the here's the patent for the algorithm or whatever. Here is everything from A to Z that the auditor, and here is how it will be commercialized, here's how it will create brand, blah, 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 blah. Here's the strategic value, here's how it complies, and if it complies, it goes on the balance sheet.
Yeah.
And
Okay.
we are the only people doing that evidence collection. That is what people in companies should be doing. I don't know why we've gone into a situation why accountants are not making sure they do it when they want an inventory of tangible assets. Why have we not insisted that people have an inventory of intangible assets? Why do we think that is too difficult?
So,
Okay, all right, Philip, yes,
yes,
please.
we do have a number of hands that I think
Yeah.
were raised in the room, so I don't
That's
know
fine.
if there's any, if, so.
Thank you so much for your panel discussion. My question is the way you approach to intangible assets. And if you compare that to the discussion that we are having in this conference earlier today, especially that we are discussing value creation. And so to me, if you put those two concepts in Venn diagram, am I right that if we put the intangible assets inside of the value creation, the concept of value is much broader versus intangible assets is something that sounds like that's something that company owns as an organizations because you call it as assets. Is that kind of too narrow kind of way of looking at the world? Because earlier today we discussed the value is something that all the stakeholders actually experienced and perceive.
Yeah.
But when it comes to intangible assets, that it seems to be talking about something that company owns. And
No,
if that's no, then I'd like to understand more clearly on that.
The answer is no.
Maria and then Laura, then Laura.
Yeah.
Okay.
Right. The answer is no, and the reason the answer is no is that if you take a circular view of this, right, the asset is shared. So if in fact I have an asset in my company, but I share it to my stakeholders, my 7 stakeholders, I not only get a share out to the stakeholders, my stakeholders also give me a share back from what they do with the stuff that I give them out. So there's a circular economy approach going on here. This is not about a one-way balance. It's going out to the stakeholder, and then it's coming back from the stakeholder into the company. So you have to look at assets both in terms of monetization value and positioning value. And the positioning value happens in the community, it happens in the in nature, it happens in all of those stakeholders. So it's not a singular straight out. This is not old-fashioned, it goes in one direction only, it goes in both directions.
Okay.
And so that's why it's wider.
Okay, Laura?
Yes, thank you so much for the question. Actually, I would make a distinction here between asset and resources. Because when we think about the asset, whether we like it or not, we entail, accounting. If we talk about resources, and then which comes with the, the definition of what is an asset and all the rest that we know. If we refer to resources, I think that will allow us what you said before, So if we take intangibles resources and put it into the definition of value creation, that is where I think that, you know, value creation will be broader. If we take the definition of intangible assets and we put it into the, you know, the scope of value creation, that is where I think we might have some difficulties. But that is only because when we talk about the asset, that refers to accounting. So I would make actually you know, a distinction here in terms of language.
Okay, but let's stop this. Is that an answer on the question of the guy that was asking the question?
Yeah, understood. Thank you.
Okay.
We have agreement that that was a great answer across both speakers.
Okay.
Other questions? We're pointing to people, but I don't see an actual hand. Can you come down forward just so that we get your question into the microphone?
Hi, yes, thank you so much for this presentation. So, Laura, I believe you had a diagram that was talking about conceptual scopes of intangibles, and you mentioned research and advertisement expenses. And I was curious if you had any like examples of how those would not be included in an accounting diagram already. Like why are we considering those two specific intangibles when in a traditional sense in accounting, research expenses and advertisement is included?
Laura?
Because yeah, it really depends whether they meet the 6 criteria according to recognition criteria of IS 38. That is the reason.
Simple.
Because basically the idea, simple idea, is that when it comes to the current accounting, you know, on intangibles, you do recognize intangibles when they are acquired.
Okay.
And that is where the whole idea, you know, about unrecognized intangibles and all the rest comes in. And that is why we need something to fix, so to speak, what the current IS 38 is saying. It's not just about the scope of intangibles that IS 38 is taking into consideration, is how it is taken into consideration. And that is only when they are acquired and, you know, they meet they basically the 6 criteria.
Okay.
Maria, do you want to add something to that?
Yeah, because it's not just when they're acquired, it's also when they're revalued at the end of every year. So if you're doing it properly, you take your evidence and you revalue it on an annual basis. So there's the acquisition date, and then there's the redevelopment of any asset as it's happened in that financial year. So if, for example, I have an asset and I add to it, for example, by adding another trademark to it or adding, which I may then have new marketing costs and new advertising costs or new whatever as part of the acquisition, then I may add those to the cost to the asset value. So it does depend on a per annum basis based on the evidence that you collect against that. And again, we always come back to what is the evidence.
Yeah.
You can never get away from show me the evidence.
Maybe I can switch to Ashvin. He's an accountant at the end of the day. So what is his perspective and how does he see it? Ashvin, you're mute. Yeah.
Yep. There are great answers from Laura and Maria as well. But I would just add one additional thing. It's respect with IS 36. We should not forget about the impairment of assets. So we should also consider that. And we go back again as an accountant and as an auditor, ex-auditor, to evidence gathering as well. Either you create the intangible assets and then you amortize it over certain years, or either it's expense already in the profit and loss accounts.
So for us non-accountants in the room, can you just explain IAS 36, like what that means, Ashvin?
I start take more than 10 minutes.
I tend not to try and explain this one, Ashvin, because it takes me more than 10 minutes.
No, but wait a second. Let's give it a try, Ashvin. Come on, in 2 minutes.
Just for a non-accounting audience, I mean, just if you say IAS, I bet many of us in the room wouldn't even be able to put those letters together with words. So just in general, what are we talking about when we talk about IAS 36?
Yeah, go ahead.
IAS is international accounting standard that we all adopt to get a kind of a consistent reporting everywhere around the world. That's what we use for reporting purposes. Or we applied basically as for reporting purposes. And what we first, when there's an expenditure, I must say, we need to understand whether it's a capital expenditure or it's an expense. If it's not of capital nature, that would have a life greater than 1 year. Let's put it that way. It's greater than 1 year, 5 years, 10 years, or whatever. But then we need to, this also include tangible and intangible assets. We are here talking about intangible assets. The IAS 36 is an impairment of assets, which is both tangible and intangible. So what we need, we put it to the test, whether there is, firstly, the evidence gathering process showing that the assets have a long duration life. That's the first thing. Then secondly, we need to know whether it's like research and development, whether we need to expense it in the balance sheet because we cannot get any outcome out of it in the future, like research. So we'd expense already. Whether the development aspect of it, we would amortize it over a number of years because of the duration of the process. And in intangible assets, rather than amortizing it, we are creating the value of the assets. So it keeps increasing each time. So I think this is in the basic terms what I can help. Thanks.
Perfect. So we are running towards the end of this panel. So if I can turn it over to Laura and to Ludo to help us wrap up, we'd like to, just on behalf of everyone here, we'd like to thank you. But if there's anything that you had wanted to do to wrap up the panel, it's in your hands. So
Laura, you can go ahead first.
Oh, I think that we need more of these discussions. That is all I can say. To bring all different perspectives together, because clearly there's a need here, whether which is not, A is better than B and B is better than C, but it's just trying to pull all different minds together to try and to find a solution. That is the only thing that I would say.
Okay.
And thank you again, Philippe.
Yes, great.
Thank you, Laura. Now, what I think is what we always think already a long time, that we have to do research. We do research. We need to think about it deeper and deeper and deeper. But we also have to make sure that we can implement it in the reality, that we can do it for companies, that they then use it. Yeah, because otherwise, if we are just going to tell them, read a book, then they will not use it. Yeah. But if we can explain them how they can benefit from it, I think that is the big takeaway from it that we need to keep in mind. Okay, so thank you for the panel. Thank you, Laura. Thank you, Maria. Thank you, Ashvin. Thank you also, Philip, for asking us.
Great, and thank you so much for the great contribution. We are planning a Valuism 2026 conference in November or December, so please mark your calendars and we'll follow up probably much sooner than we did this year. So thank you all very much. It was wonderful, hopefully eye-opening for people in the room and online. We're going to take a short 5-minute break, and I can already see our next panel members are here, so we'll just switch over. And we'll start up again in 5 minutes. So thank you all very, very much.
Okay, thank you. Bye for now. Bye-bye.
Thank you.
Thank you.
Bye. Bye-bye.